Good afternoon. We are in calendar earnings for 2013 in this quarter. One of the things that we're featuring is Domino's Pizza. There's been a problem in regular retail and there's been a problem in fast food. Domino's Pizza missed their earnings, as we said they would. It's the first time in 6 quarters that Domino's Pizza has missed. We will say they missed on the EPS. The firm argues that top line trends remain intact and lower food costs will give it a lift moving forward. That's what they're talking about. What we're talking about is they're blaming the higher cost of commodities, but we don't see a lot of that where commodities are inflationary or anything else. They missed. What does it tell us? It tells us that the consumer isn't eating a lot of fast food, unhealthy pizza. It's been a great stock. It was up here toward the 52-week highs. Look, quarterly earnings have started. Lots of companies are going to have a problem. Other fast food chains have already had a problem in their earnings. We've always enjoyed this Domino's Pizza because they've executed well. But one of the messages that we're delivering to our trading staff and our new students about fundamentals, about earnings reports. How do you know what is true or what is false? How do you read them? How do you interpretate them? How do you understand all of the accounting gimmicks that go in these reports and how things have changed over the last 30 years? I've been around that long, and I can tell you right now that there's going to be a lot more companies, and Chipotle Mexican Grill will be reporting earnings. Listen, they did well. And the problem is that growth is contracting. And it's the first quarterly miss in 6 quarters. We will buy the dips at certain areas on Domino's Pizza. Okay? It's had a great calendar year. When we take a look at the monthly chart on Domino's, you can see way back over here when it was at $49 a share, it took several months. That's how these kind of stocks are safe haven on growth patterns. They had growth at one time. They still do, by the way. It's testing the 10-week moving average. We'll be taking a look at support right above $63 to buy dips. So one of the things that we would like to say is that the results are not a total catastrophe. The lesson learned for the rest of the earnings season that just really started this week. We already did the Yahoo. There have been other quarterly reports that have come out that haven't done well. Citigroup missed this morning. So one of the things, Wells Fargo, they didn't do that well. And Bank of America is going to be coming out with their earnings. But we're looking at where the consumer is. And if the consumer is weak in the fast food area, we can just imagine how that rolls over forward looking in this particular earnings report and 2014. Domino's Pizza, I hope you enjoy it because we're going to enjoy buying the dips and shorting up at the highs here. And once again, it's an awareness for our new trading staff and how to take advantage of company reports when they report. Okay? So, Domino's Pizza, once again, it has a problem short term.